learners, greetings of the day. Today we will start with Introduction to Forensic Accounting. Let's begin with the session. In today's session, we will understand the basic and meaning of forensic accounting, the definition of forensic accounting, scope of forensic accounting, importance of forensic accounting followed by a reference case. Let's begin today's session. In recent years, the growing globalization and digitalization have changed the business environment for a better purpose. However, the incidence of financial crimes and fraud have also increased. Let's begin our session in forensic accounting with one of the most powerful cases where this field changed the corporate world. Yes, I'm talking about the Enron case. Imagine a company so powerful that it was once America's seventh largest corporation. Yet, in just few months, it collapsed completely. What brought it down? Wasn't the market forces? It was accounting fraud, the game behind the numbers. Enron was a star performer in the US energy sector until forensic accounting uncovered a different story behind the numbers. Looking towards the nature of the fraud, when we talk about the nature of the fraud, in this case, it changed the entire corporate world, leading to new laws and reforms. Enron, once a giant in the energy sector, filed for bankruptcy in December 2001. It was the largest corporate bankruptcy in US history at that time. Executive created complex shell companies and false accounting entries to make losses disappear. This is where forensic accountant stepped in. Forensic accountant played a key role in uncovering the truth, tracing the fake transactions, hidden debts, and manipulated books. What was the outcome of this? This collapse wiped out around $74 billion in shareholder value. Imagine the impact on employees, investors, and the broader economy. Top executives were imprisoned for fraud and conspiracy. The scandal also led to the downfall of Arthur Andersen, one of the 5 largest audit firms in the world. In response, the US government passed the Sarbanes-Oxley Act in 2002. This law reformed corporate governance, increased transparency, and imposed stricter audit standards. This Enron story is a powerful reminder of importance of ethics, oversight, and accountability in business. Now, learners, you will be able to understand what accounting actually means. Forensic accounting is a type of accounting where you investigate financial information for potential evidence of crimes. Forensic accountants use accounting, auditing, and investigative skills to understand whether a person or a company has committed financial misconduct such as fraud or embezzlement. Forensic accountants utilize their accounting expertise along with investigative skills to analyze complex financial data, detect irregularities, and provide evidence for legal proceedings. They often work closely with law enforcement agencies, attorneys, and corporate entities to unravel financial discrepancies, reconstruct financial transactions, and quantify the damages in cases ranging from corporate fraud to money laundering. The unique aspect of forensic accounting is that forensic accountants use legal skills to determine if financial activity is illegal and often present their findings in the court. This multifaceted approach allows forensic accountants to collect, analyze, and evaluate the evidential matter in diverse contexts, not just limited to fraud, but yes, also extending to the areas such as litigation support, dispute resolution, bankruptcy, marital disputes, and regulatory compliance. Now, when you ask two or more practicing accountants to define how you understand or define forensic accounting, I'm sure you are likely to get a different answers. The response will mainly depend on the background, experience, and the area of practice. But forensic accounting is the application of investigative and analytical skills for the purpose of resolving financial issues in a manner that meets standards required by court of law. Forensic accountants apply special skills in accounting, auditing, finance, quantitative method, and certain area of law, research, and investigative skills to collect, analyze, and evaluate the evidential matter and to interpret the communicated findings. Now, learners, let us explore how forensic accounting extends beyond traditional accounting and plays vital role in legal and investigative contexts. Broadly, they are categorized into two purposes: legal purpose and investigative purpose. Forensic accounting is generally described as accounting used for legal purpose. It involves searching for evidence of significant development or abnormalities in accounting and financial systems. It includes designing accounting process that helps in verifying financial data and identifying the potential fraud. Forensic accountants often perform audit-type procedure on a regular basis to minimize the risk in transaction processing. The scope also extends to continuous monitoring and surveillance of financial system across multiple business units and locations. Insolvency cases where they help to trace missing assets and analyze financial collapse. In cases of bank forensic audit, they detect loan frauds, diversions of funds, and irregularities in financial statements. Also in economic offense wings, they investigate the complex financial crimes. According to SEBI, where forensic experts analyze manipulation in stock trading and corporate disclosures. Serious Fraud Investigation Office, where accountants handle high-value corporate frauds and white-collar crime investigations. We will be discussing the relevance of forensic accounting in an organization, an area that will bridge the finance, investigation, and law to ensure transparency and accountability. Number 1, assessing operational compliance. In this, the forensic accountant will usually evaluate working transactions to ensure they align with the organization's established policies, procedures, and arrangements. Second, in examining financial dealings, they scrutinize the payments and financial transactions to determine whether they are standard, authorized, and fall out the company's policy framework. Third, in detecting manipulation or any kind of falsification, accountants analyze the general ledgers and reporting systems to identify possible tampering or falsification of accounts and assess its impact on financial statements. In next, investigating fraud in claims or returns. They will review warranty claims, refunds, and return transactions to uncover fraudulent or abusive practices that may harm the organizations financially. Evaluating economic damages. In the event of fire, natural disaster, or any kind of unforeseen losses, these accountants will help estimate economic damages and ensure claims with the accuracy. Also, they will assess the business evaluations. They also play a vital role in verifying and validating the business ratings and valuation during mergers, acquisitions, and consolidations. I would like to summarize my session. Forensic accounting is not just a specialized area of accounting. It is basically the skill sets and activities which will encompass forensic accounting have been around for a while, although it was not necessarily always called the forensic accounting. Forensic accounting became common when the massive financial and accounting scandals involving Enron and WorldCom came into the limelight. Such scams elevate the need of forensic accountant in various industries who can prevent and investigate the frauds with their expertise in accounting and auditing using technical skills. Forensic accounting ensures financial transparency, accuracy, and compliance within an organization. They analyze the warranty claims, refunds, and insurance demands to identify misuse or false reporting. During any kind of natural calamities, they assist in estimating the financial loss and validating the insurance claim. Their expertise is also valuable in business valuation, mergers, and acquisitions, ensuring that figures are fair and reliable. As we learn Enron's case, this illustrates where we learn how accounting protects integrity, exposes fraud, and ensures justice. Remember, forensic accounting is not just about catching fraudsters. It's about safeguarding the integrity and restoring the trust. Let's end the session with a small note. Every balance sheet tells a story. Your role is to find the truth behind the numbers. I hope this session would be fruitful for you. Let's meet in the next session. Till then, happy learning.